Happy 5th of July. It's a day after the fireworks, but we're still getting some from central banks around the world. The Bank of England started things off, leaving rates unchanged as expected, but also boosting the size of its asset purchase program. In other words, God save the QE. China then steps in with a surprise rate cut, lowering its key lending rate down to 6%. That's obviously still relatively high compared to other places around the world, but the second rate cut in a few months for China, that is significant. Finally, the ECB topped things off by lowering interest rates to an all-time low, 0.75%. That may be disappointing to some who had hoped that the ECB would cut rates a full half percentage point to 0.5%, but guess what? There are many more months in the year for the ECB to lower rates, and I'd be shocked if the ECB doesn't cut rates again sometime in the next few months unless Europe perks up, and that doesn't seem very likely. We've got a global economy that is clearly very fragile right now. The fact that an emerging market like China, which is still growing much more rapidly than the rest of the world, sees fit to lower interest rates just shows how perilous things are right now. Everyone is worried about Europe, and the ripple effects are clearly going around the globe. And that brings us finally to the United States. Obviously, the Federal Reserve can't lower interest rates because they're already near zero. Everyone's hoping for QE3. Maybe Ben Bernanke will drop some hints about another bond buying program at the Jackson Hole Symposium in August. But guess what? The jobs market might actually be getting a little bit better, and that's really the only reason why the Fed should be doing QE3. One of its mandates is to keep unemployment relatively low, but we've had some good news on Thursday. Jobless claims down from a week ago, and ADP, which I've derisively referred to in the past as kind of like the USFL of jobs reports, did show better than expected gains in private sector payrolls. Now, if the jobs numbers are confirmed on Friday by the Labor Department that we do maybe have the worst of this slump over and we have better than expected gains, then that is good news. But guess what? It means we don't need QE.